something is coming. And I think this is going to be the biggest crash in world history. I just don't trust my government. I don't trust the Fed. I don't trust the Treasury. And I definitely don't trust Biden. Never in the history of the world has the entire world been in debt. 1929, the stock market was 381, the Dow. It took until 1954, 25 years, to get back to 381 Dow again. This time it's different. This is the new economy. We are just coming out of the longest bull run in history, 11 years. Started in 2011.
At Davos, Switzerland, the IMF stood up and said, the world economy is hitting into the worst economic headwinds since World War II, the worst.
This is about as macro an environment as I've ever seen. And I think most people's read on it is probably wrong. So why World War II? World War II was a fascinating period because, like COVID, the entire world had basically been stuck at home or been on battlefields. Everyone came back. There was no supply of commodities and goods. Global supply chains were broken and everybody came back and started consuming again. And guess what? Inflation went up to 13% or something, maybe even higher. And that period was fascinating because interest rates went up. And the first thing that happened was the economy went straight back into recession and rates and inflation went negative because it was a massive tightening of monetary conditions. You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times. And I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of these oil crisis of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled and interest rates went up. Inflation shot up. And the immediate effect was the economy went down the toilet. Almost do not pass go. The stock market fell 50%. And the ISM survey, which is a good guide to the business cycle, it's the Institute of Supply Managers survey. Anytime it crosses below 50, suggests the economy is getting weak. A recession comes at about 47. It hit 30, which was the lowest in all history. And it happened in a space of 4 months. It went from roughly where it is today, which is around 55, and went to the lowest level in 4 months, based on exactly the same kind of setup we've got now.
So are you saying that the 70s are now pretty close?
Yes, and inflation fell in 1974 afterwards. People are still thinking inflation goes on forever. It did not, and it did not in the 1940s either. Then the next one up is 1984. 1984, we saw an issue where global trade, there was a huge amount of trade disputes. The dollar was pretty strong, like it is now. Interest rates were going up, and inflation was high. And everybody was fearing, looking back and saying, oh, we don't want the early 80s, late 70s again, the inflation. So Volcker was tightening rates too much and the economy collapsed. It didn't go to recession because the Fed quickly started cutting rates, but the dollar went up a lot more and created a lot more problems. We ended up with the Plaza Accord in 1985 when everybody had to stop the dollar going up from destroying the global economy.
Right.
So then the next time we see something similar was 2008. 2008, if you remember, the oil price was at $147. Inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high. The Fed were hiking rates, trying to tighten the balance sheet. And what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that, gas prices, all of this stuff. And then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall. Now,
what does ISM stand for?
Institute of Supply Management, it's the survey buyers at corporations who buy goods and services. They ask them, what is your read on the economy? How much inventory have you got? What are prices paid like? That kind of stuff. And they create these surveys and they're readily available online and you can have a look at them and they go up and down with the economy. They tend to lead the economy. And it's suggesting that if we're not careful, we could have a very sharp, nasty recession, meaning kind of a negative 5% GDP recession. It might be short, depending what the Fed does, and we'll come on to that in a bit. So we've got the setup that we've seen many times in the past. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come. Then the anecdotal evidence, we're seeing all the tech companies who were bulletproof laying off staff. Earnings warnings, because everybody can't raise prices enough. So their margins are falling and people have overextended. Amazon said, we've hired too many people. They're one of the biggest employers in the United States. Okay, this is not good. But the answer to higher prices is higher prices. And that's what's happened. And everybody's looking around you themselves saying, well, what's going to break? When stuff like this happens, the market goes down, something's going to break. We're looking, what bank is it? What hedge fund is it? The actual answer is it's the economy. The economy has just broken and the Fed are going to have to pivot.
And that's what the IMF is saying in Davos yesterday.
They're saying, and it's dead right, the monetary conditions that we've imposed on corporates and people is the biggest tightening in all history.
Wow.
We've also got China slowing down very fast because the lockdowns, but also they've been in recession. So we've got and Europe with a war and having to deal with this energy transition. So we've got no leg of global growth here.
My whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But something even worse happening is the last crash was, let's say, 2008 when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market. Since 2008, we've been nothing and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah.
And we were just talking to Raoul Pal, and he said the problem with that is that the bull goes up the stairs, bear comes out the window. Because I think we're in serious financial trouble right now. I mean, the repo market collapsed again, which it did in 2008. And everybody, I meet people and say, well, I'm just going to get into real estate. I'm going, now? Where were you 10 years ago when everything was moving up at high rates of speed? Where the heck are these people? I mean, the Fed's going to raise rates. We're at war with Russia. I mean, what the heck are you guys thinking? America stopped producing. We stopped making things. And all America has done is produce bubbles. So we have a bubble in real estate, bubble in stocks, bubble in bonds. Everybody's happy. They think they're getting rich today. And I've never seen it so frightening. The problem, this is the everything bubble. This is the biggest bubble in world history. So it's going to be big. We're going to a depression, possibly a depression. And so when our buddy Joe Biden took off the Keystone XL pipeline, inflation went through the roof. That wipes out the poor because they can't afford to eat. Because oil, I'm an oil guy. I went to school to work for Standard Oil. When the price of oil goes up, fertilizer goes up. Fertilizer goes up, food goes up. I think America's going into the next depression, but for those who are prepared for it. And so Limitless is about those preparing for the biggest crash. You're not what with the Marine Corps called the FNG, the new guy. This is not for new guys, right? I think people are kind of waking up that inflation is here. And the problem with inflation, it makes the rich richer, but it makes the poor poor. I mean, literally poor. And then the middle class it's hit the hardest. When Biden is in charge and the way the dollar is set up, the dollar always loses money. It's called Triffin's dilemma. If you're the reserve currency of the world, the dollar always loses value because debt always goes up. So the Fed has to keep printing. The Treasury has to keep printing. And that's why if you read Rich Dad, Poor Dad, which came out 25 years ago, it said the rich don't work for money, rich don't save money because the dollar is fake. The U.S. dollar is fake. All currencies are fake.